Hello, my friends. Hey, it is John Lone King, and thank you for joining me today for my weekly live update. I have the wrong, here we go. Is this the one? Yeah, there we go. That's what I'm looking for. Anyway, thank you for joining me. I am here today to do my weekly update on what the heck is going on in the housing market and the mortgage market and everything you need to know to succeed, whether you are looking to buy a home or you own one. And you want to know kind of what your correct next move is. So we're going to dive into some specific reports that have come out. Today, we actually got a really important report. It was the inflation report that talks about what's happening with inflation month over month. And inflation is really critical when it comes to housing and interest rates. Inflation has been the reason why we saw interest rates skyrocket between 2022 and now. Remember, we had rates hit all the way up to the 6%, to 8% a couple of times over the last 4 years. And now we're starting to see them come back down specifically because of inflation. And so what we have to look for is the tea leaves of what does it say is going to happen with inflation in the future. The report came in mostly as expected, but a big thing was housing inflation continued to cool. That's a good thing. That means that's a good thing in two ways. Number one is it's good for the future of inflation because high inflation means interest rates have to stay up. As inflation comes down, it means interest rates can come down. Can, not guaranteed, but can. So inflation is critical in that regard. But also the fact that housing inflation is cooling actually proves that affordability is getting better. Now, no, we haven't solved the affordability problem. No, you're sitting here saying, John, I'm trying to buy a house right now and it is nowhere near affordable. But as a general statement, housing is becoming more affordable. Now, let's be careful because housing includes rentals as well as owning. And so it's not a clear picture of what it's going to cost to own a home because the cost of renting and the cost of payment for owning, you're going to step up pretty sizably when you buy a home compared to what you could pay in rent for the similar home. But remember, the rent is going to go up over time. The purchase, the price you pay in your mortgage is going to stay the same or go down over time. And especially as you see interest rates on the higher end and they're coming down, that gives us hope that in the future we're going to see rates come down. But we have buried the concept of marry the house and date the rate. Now, probably the moment that we bury it is the moment that it actually will be true. But do not think to yourself, oh my gosh, I'm just going to get a great house and I'll get a lower rate later. Be very careful about that thinking. There is a really good chance that will come true, but you don't want to plan for it. And too many people over the last 4 years have planned for that, and it has been a bad relationship and it did not end well. And I don't want you to be in that situation. So this week we've seen mortgage rates move lower. So depending upon what type of loan you're doing, we are anywhere from 5.75 to 6.25, which is phenomenal. We were previously between 6 and 6.5. So really good opportunity. Rates are moving lower. But here's the deal. Mortgage rates, it matters a lot right now where mortgage rates are at because it's going to drive the housing market. Right now, in most areas, we are definitely experiencing a buyer's market. A buyer's market means there are more people wanting to sell their home than there are people willing to buy them. Therefore, the buyer has the leverage. But don't confuse that with you get to write whatever offer you want because sellers are stubborn, especially now, even more so now. And the sellers are saying, I don't have to sell. And so I'll put it on the market, but I'm going to wait. And that's bad because the sellers now are looking like they're stale listings. They've been on the market for a long time. Makes people wonder what's wrong with that house. It's a great opportunity for a buyer that wants to negotiate, but I'll tell you, negotiating to get a lower price is harder right now. It's a lot easier to negotiate to get credits for closing costs because the seller gets to think they got full price on the home. And if you're a seller, you got to think, hey, do I really want to sell my home right now? Because if I do, I've got to be serious about it and not be stubborn about it. Because here's the deal. Home buyers didn't disappear. They just delayed. Now, we have a weird phenomenon. In 2020 and 2021, rates dipped significantly, and we basically borrowed buyers from the future. So we basically had people who probably were going to buy in 22, 23, 24 that said, my God, rates are so low, I'm going to buy now. And so we did a whole bunch of transactions and we borrowed buyers from the future. But now we've kind of flipped And the script is now backwards. And now we've gotten to the point that, sure, we borrowed buyers from the future, but now we've had a whole bunch of buyers that would have bought in 24 or 25 that delayed, that said, this is not a good time for me to buy. I don't want to make a purchase right now. And so they put off their buying decision. And so those home buyers didn't disappear. They didn't say, I'm not going to buy. They just said, I'm not going to buy now. And so what we're dealing with is we're dealing with years of pent up demand. We're dealing with people who have thought, you know what, I'm going to buy a home at some point in time when interest rates fall. And from what a calculation was that I read from some people that I trust, they said that there's over 160 million Americans that are still working. So if you're thinking about, oh my gosh, the job market is bad and people aren't going to buy homes because people are losing their jobs. There's 160 million Americans that are still working, and we've got 5 generations of buyers that are still in the market. So we've got a unique time where people have pulled out or delayed buying a home, but there's a huge amount of demand from a large population of people who have stable income. Their incomes have continued to increase, and the payment for housing has started to decline compared to where it was at its peak a few years ago. And so basically what the worry is right now is what happens if interest rates move towards 5%. The first thought is, oh my God, that'd be amazing. Careful what you wish for. I had a client a week ago, who said, gosh, John, I just really wish it was 2021 again, when I could get a 3% interest rate, things would be so much easier. And I said to that client, be careful what you wish for. Because back in 2020 and 2021, you wouldn't have gotten an offer accepted. And I explained this client's situation. They have zero money for a down payment, and they have about $10,000 they can use for closing costs, but they really want to get the seller to pay the closing costs. And so they're negotiating with the seller to have the seller pay closing costs for them. And it's putting them today in a position that they have strength, they have leverage. The house they're writing an offer on has been on the market for 145 days. So they have leverage. And they said, but I wish that it was back in, because they're worried about the payment. I wish it was back in 2020 when I could have gotten a 3% interest rate. And I'm telling you, the seller would not have accepted your offer because there would have been at least 10 other people willing to buy the house. So you would not have gotten a seller credit. And 9 of those 10 other people weren't asking for closing cost assistance, so you wouldn't have been considered. And 7 of those other people had large down payments, so they would have considered those over you. And 5 of those people were paying cash, and they were willing to pay over the asking price, which means nobody else could compete. Those 5 people paying cash over the asking price, they were the only ones that were competing. Everybody else had an impossible time getting an offer accepted. And guess what everybody told me back then? God, John, I just wish that rates were higher so that there weren't as many people trying to buy a house, because then I could get an offer accepted. Because right now, the only choice I have on a home is the ugliest, most rundown, broken house out there. And I have to pay how much for that house? Because that's all there is. And so you have to decide, do I want to be in that situation, or do I want to be in the one that we're in today? Well, here's the truth. If rates move towards 5%, we might be back in a similar situation, because nobody expects rates to be at 3. So everybody who's sitting on the sidelines right now, they are going to jump into the market when rates drop. So now you're going to have a harder time getting your offer accepted. Now you're going to be in a pickle because you're like, my gosh, I got what I wanted, and now rates are lower and I can afford the payment. But by the way, the house price has spiked up. And so you've got buyer activity will cause the sales to jump. Like home sales don't gradually rise. They skyrocket, they jump, they take a significant shift because you're not the only one thinking that you're going to wait for interest rates to drop. So are all of your peers. So is everybody else who delayed buying since 2022. And 5% seems to be the magic number. If we can get a rate starting with a 4, all bets are off. Everybody is jumping into the market. Right now, we have rates starting with a 5. So if we can get rates starting with a 4, we're going to see a pandemonium, in my opinion, of buyers coming out of the woodwork. And yes, there is extra inventory right now that you'd say, well, that's okay, John, because the buyer supply and demand says there's room for that. Not that much room. Not enough room to eat up what the number of people are who are going to be looking to purchase. So let's jump in really. Actually, I'll cover a few more things and then I'll jump in. I've got some questions and I'll answer those. So more buyers means more competition. And so you got to be careful because the market can and will change quickly. And so it's really about the buyers who are prepared now and really taking action now. You might pay a little bit higher interest rate, but you get better choice of the homes that you get to choose from. And you theoretically, if this really does come true, will have the ability to refinance as rates are lower and be able to get the best of both worlds. All right, let me jump into my questions. Let me put, it's just comments from Kathleen, and Kathleen said she agreed. So thank you, Kathleen, for the agreement. Thank you for the like. And guys, I want to be here to help answer any questions that you have. So let me just be really clear as I summarize. I am feeling very optimistic about 2026. You've got the presidential administration trying to do everything possible to lower the cost of housing. Just last night, I saw an email with an article saying that the White House is proposing eliminating property taxes for everybody. That'd be awesome, but we're going to have to pay for it somewhere else because the counties across the country count on property taxes to fund all of their operations. So you can't just eliminate property taxes and think that these operations are still going to run. So I don't know that this is going to happen. I don't know if it's hyperbole just from the White House trying to get some press and get some traction and saying, well, I'm doing everything I can to lower the cost of home ownership. But I will tell you that if you throw enough ideas against the wall, something's going to stick. The fact that they decided a month ago to take money from Fannie Mae and Freddie Mac and invest it into the mortgage market, it's working. It's driving down interest rates combined with inflation being lower like we're seeing today. And we're seeing interest rates falling, and that's a good sign. But you just have to be careful because too much of a good thing ain't so good. And that's what we have to worry about going forward. So if you have questions about anything, please feel free to reach out. If you are ready to start the process, be clear. I am interviewing for the job to be your lender. Scan this QR code up here. Check out my website. Get all the information you need to about how to move forward. You can book a call with me. And if you are in California, and if you are a first-time home buyer, specifically first-generation home buyer, you need to know about the California Dream for All program. I've got a webinar on Monday at noon that is kind of an update about the program. And then every Wednesday night at 7, I am doing a complete start-to-finish tutorial for an hour where you can ask questions, get everything you need to know about it. You can get all that information by clicking here, scanning that QR code, going to johnloneking.info, and then you get the link at the top to my California Dream for All page. Doesn't look like I have any other questions, guys. Thanks, everybody who joined me live. Hope you have an absolutely wonderful Valentine's Day, holiday, 3-day weekend, and we'll talk to y'all next week. Bye-bye.